Hello everyone, I hope you guys are doing great. So today we'll be having David Westrop, who is head of blockchain at Merkle Standard and having expertise in finance. So I'll be asking him some questions related to blockchain and finance and like how his transition from finance to decentralized finance. So without a further ado, let's welcome David. Yeah, hello David. I hope you are doing great. It's really nice to have you here.
Fantastic. Thanks so much for having me.
Great. So first of all, I would basically like you to introduce yourself.
Sure. So David Westrop, head of blockchain for Merkle Standard. Before that, I was the director of operations for DMG Blockchain, one of the earlier publicly traded Bitcoin mining companies. Prior to that, I had been at several Canadian-based blockchain startups, mostly that went on the data analytics and on-chain data side. And then prior to that, State Street and only making stuff.
Okay.
Yeah, it's been quite the road.
Okay. Yeah, that's great to know. And also, like, if you can briefly describe like about your work as head of blockchain at Merkle Standard.
Of course. So, Merkle Standard is the largest operator of hydro-cooled machines in the US. For those that don't know what that means, that's in Bitcoin mining, you use a specialized computer called an ASIC, and there's various ways of cooling those that have expanded as time has gone on. But specifically, the method that we focus on has just kind of come out in the last little while, where manufacturers have provided a form factor machine that's cooled with water. So we're the largest operators of those in the US with our partner Bitmain. I kind of sit at the intersection of operations and technology, which is a really broad description. So I'll try and narrow that down for you. Originally, when I started, it was focused solely on staking and DeFi platforms and derivatives of hash rate. So how you would sell hash rate as commodity and things like that. But given we were ramping up our mining operations very rapidly, in about 8 months, we grew to 1.8 exahash, which is very quick. And again, I can opine on any of these things as to what they are. If it's just jargon, please let me know, cut me off, and then I'll happily expand on that. But given all that extension, it then pulled me into more segments of the company, such as operations, the deal making and negotiation and site development and origination and all that. But that was probably a lot of jargon, so please let me know what you want me to elaborate.
Yeah. I think that's fine. Basically, like what I want you to elaborate is the term DeFi, so that the general public can understand that in a better way.
Of course. So DeFi, or Decentralized Finance, is a very broad umbrella term that explains what is a huge sector, just like finance in itself is a huge sector. But the easiest way I would summarize it is the idea that you are opening up finance and access to financial products that were previously exclusive to large financial institutions and New York's, Wall Street traders. And now anybody can access similar platforms on a decentralized manner. So what we've done is we've taken things like dark pools and exotic derivatives and things like that, very bespoke products. And now anyone that has access to the internet can interact with these. But more importantly, anybody that has access to the internet can build on top of the blocks that already exist. So it's largely DeFi is built in an open source manner. And my favorite example I usually point to are probably flash loans. And so a flash loan is a very, very essentially no risk reward loan to the lender. But on the borrower's end, it increases their access to capital exponentially further than they would ever have access to. Like you're a developer speed. So for instance, if you wanted to go, we spotted an arbitrage trade in traditional markets, say on the NASDAQ and the New York Stock Exchange, or anything it is, and you wanted to go in on this trade, you would struggle and not you in particular, I felt most of the population struggled with gaining access to capital, gaining access to the market makers that can transact that trade as quickly as you need. And on the flip side, what we've done is there's now this entire financial network that gives you products where you can go and act on something as long as you have the intellect to do so. So if you spot a discrepancy between, decentralized exchanges, you can go and structure a trade where you're taking out a loan, and that loan is dependent on the subsequent actions that happen within that trade, all in a single transaction. So they're all bundled together. So the lender, there's no risk at all because the outflow of capital only occurs if all the other criteria are met, which is phenomenal from the lender's point of view because now you've eliminated your counterparty risk and your money isn't going to disappear. And then on the executor's end, your risk that you're bearing is simply your transaction fees that you would have paid to submit this transaction. Because again, if it doesn't go through, all that you've lost is the transaction fees you have to spend, which is equivalent to the premiums are up or something like that. And so to bottle that up concisely, because I know that was a bit of a tangent, DeFi allows people across the world to execute on various strategies, access to various products, be them grandiose like flash loans where you can take out a low risk loan, execute on this trade, and then reap the rewards, all the way to just simple banking functionalities through the unbanked. They currently don't have access to the institutions that you and I are familiar with, being in large established nations. And that's probably the best horrible way I could go about explaining.
Okay. Yeah. And also in one of my podcasts, a guy who is basically a smart contract auditor, with the name of Johnny Time. I think we have also seen him, Johnny Time. So he has basically described that, he has mentioned that the flash loans are the most common ones when it comes to vulnerability.
I'd say that the most common one is vulnerabilities related to flash loans attacks, right? Because it's very hard once you write smart contracts and a developer to think about the whole ecosystem, how your smart contracts integrate with other protocols, with other smart contracts. And flash loans is something that is a bit hard to grasp, especially even for developers, because it's something very technical and it's a bit hard to understand. And a lot of developers do not know and do not understand how flash loans work. And even if they know, it's very hard to put all the different possibilities of how one can exploit your contract using flash loans and Oracle price manipulations. And we see so many flash loan attacks in a lot of DeFi protocols. It could be lending protocols, AMMs, options, all these kind of DeFi protocols. I would say the most common attack is flash loans.
Oh. So if you can give your views on that.
Yeah, so that's great. I mean, there's two ways to look at that. If you provide flash loans as a service and you're not auditing the smart contract that issues the loan, you could open up a risk to how that's executed. And that's a great point. So I should really expand on that. Nothing's flawless. If there's a vulnerability, DeFi is also the most ruthless place to be. As I often describe that as the dark forest, which in short is this idea that you're in a spot where you can't see anything beyond your hands, right? There's whatever's out there is very dangerous, but you can't tell it's there. It's lurking in the darkness. And if you make one wrong step, it's toast. It's over. And DeFi is great for that. As you pointed out, flash loans are a good example of that. So flash loans provide two dangerous scenarios. One, if you're the lender and the contract isn't executed properly, you are at risk, right? It's not the same risk as counterparty risk in the sense of traditional finance, right, where your lender just defaults. But say there's security risk in the contract itself and it can't be executed thoroughly or as you expect it to, you're going to have a really bad time. On the flip side, they also allow people to attack vulnerabilities in networks and protocols that do exist. And there's countless examples of this hacks throughout time. I was on these things where essentially a smart, anonymous individual has identified a vulnerability in a protocol or a particular smart contract, exchange, or whichever, And then they now have access to anonymous means of capital that they can rapidly deploy into that space. And so this flash loan essentially is giving them the power and the capital to execute on, very malicious trades and very malicious ways of extracting value from these networks. Now, that doesn't mean that they're a bad thing. Anything that's good for humanity is good for criminals or malicious people, right? So, either that was a great example of that. Right? There's lots of horrible things that happen on the internet, unfortunately, but still, it's a net benefit to society. You and I are sitting on completely opposite ends of the planet right now, communicating very smoothly, very easily, and I would say that's a net benefit. Unfortunately, there are things that happen on the internet that neither you nor I would condone or want to happen, and that's a necessary side effect, an unfortunate side effect. And the same can be said for things in DeFi. Things that provide value to users also provide value to criminals. It's just the way it works, because criminals are users, criminals are people. So the DeFi space will have to, as with every space, and traditional finance is sinking into this too. You see the headlines of banks involved in fraud and money laundering, things like that as well. So by no means is this isolated to our world, but you're right. Like you provide these very cutting edge, still being figured. We don't necessarily know how all the pieces come together. You're going to find bugs. You're going to find the hard way. And DeFi is probably the best way to do it because there's actual capital online. So there's so much incentive on both ends. Your attackers are heavily incentivized to find vulnerabilities, and the defenders are heavily incentivized because they're trying to protect their board. Either they're dragons sitting on the piles of gold. So in a sense, you're going to get digital security through some very heavy, written in blood style rules, but you're going to find them quick. Because if there's money to be made, if there's money to be siphoned off, if there's free money existing, you and I both know that the market will sort that out very quickly. And so it's, I guess, capitalism at its peak. It's concentrated finance with, all the guardrails taken away, and we get to see how that plays out and how, vulnerabilities are exploited. And the creative ways that people can come about that, which, not that I ever wish to see people lose money, other than negate that it's been very interesting in the space, seeing how smart contract vulnerabilities have been manipulated and taken advantage of and drained. Bridges are probably one of the easiest ones to look at, right? On the bridges, just where you can have one chain. I know you know the same, but for those listening, and another chain, you wish to transfer value from chain A to chain B, you have to have some sort of protocol or network or software layer that can translate, hey, this value on this area is locked up so that we can then move it over to here, right? But then the problem becomes you technically kind of duplicated the value. And so somebody is smart enough to find a way to extract it from one while keeping it on the other. You've created a big problem.
Basically a bridge. You mean a bridge?
Yes, exactly. Yeah. Bridges between nodes. And so, yeah, that's kind of how I would expand on, smart contract vulnerability or flash loan vulnerability, and within the space it's a unfortunate side effect of technology moving forward at breakneck speeds, but it also provides value on our end because the incentives to see where these vulnerabilities are huge, and they're public. All these, like we talked about earlier with DeFi, all this code is, you can just go look it up, right? You can go through the GitHub and you can see how all this is written. I guess a little bit of GitLab now too, which is a mutually beneficial thing for everyone, right? Now, if you as a software engineer, benefit greatly from being able to go see how these things come together. Unfortunately, the more malicious people also benefit from being able to go through and see how these things can be torn apart.
Okay. So actually, I've seen in your LinkedIn profile, you are having a background in finance, right? And like what, so actually I would like to ask, like, what is the reason or motivation behind shifting from finance to a decentralized finance basically?
I should preface, while I do a good chunk of DeFi stuff, most of my current work is focused on Bitcoin mining and adjacent stuff there. But to answer the question, I was just impatient, I think is the best way to describe it. I worked at a big financial institution, which is a great career for lots of people. I can't stress that enough. You can do very well. In more cases than not, a lot of people will do much better staying in a big bank than they will trying to start up their own thing or jump into small companies. So I don't want this to come off as dismissive to anybody. Obviously, that goes without saying. The people that work at these big institutions are compensated very well. They have very nice offices and jobs. You know, the masters of the universe, they rule the world. But if you are not a patient person, if you do not like waiting for the bureaucracy, it becomes taxing. It becomes slow. And so I worked at my office and I was very focused on how we can improve efficiencies, how we improve things. My department was largely focused on valuing various assets, fixed income derivatives and things like that, and creating models for these more bespoke products. They didn't have access to easy data, you know, where you would just plug into a Bloomberg terminal or Reuters and pull it. And I was finding ways that you could automate this process and make it quicker. And I kept coming to my VP and going like, hey, we should group here, we should group here. And he kept pushing back. So we don't want to, you know, go against the grain this bad. We shouldn't be trying to do this. You know, it's too much effort to make sure that everybody's competent in Python on them. We can't. Which is how I get it now. Looking back, I was young and eager. I can understand why a VP doesn't want to upend his entire department. I get that. It's a big enterprise. But for me, it was the idea that I could leave a big institution and go and work on things at my speed with other people that were also interested in working on things very quickly and pushing limits and breaking things and essentially fucking up and learning the hard way. Because that's what you learn best, right? There's this idea that you have to learn how to do something before you can go and do it. And it's a little backwards. Obviously, that isn't a universal rule. I would prefer my doctors knew how to do things before they actually went and tried to do them. But for business where there's, you know, not lives on the line, it was easier to jump in and figure out how it goes together. And so blockchain and DeFi was a really easy one for me because I was already very involved in finance, hence why I did my education. I was a mediocre at best software engineer, right? At the time, I was writing mostly VBA and Python. And so I had the tools, I had an entire industry that was basically laid out in front of me that checks all the boxes of my interest, while being so new that I could just jump right in and make the rules up as we went. And so for people that are interested in those, well, of course, it's much more attractive and it benefited me very well. You know, I went from being a big, slow bank to within 2 years, you know, working on buy-side deals for, $100 million roll-ups and things like that, which was very exciting and something that I would have laughed at the idea of being, sat in a room discussing these things 2 years prior. And that's kind of what drove me initially. And then as time moves on, and you're less young and focused on your individual career and your individual interests, you also start to realize that the internet did so much for the world. The internet checked so many boxes for everyone. Like we discussed earlier, you and I are communicating. You now have a business of your own. You have a podcast that you can post. You have this freedom that never existed before, right? And you get to drive all of that. And you eat what you kill. And DeFi is essentially bringing that same structure on a focus of finance to the world, which that all of a sudden also becomes very motivating. This idea that I live in a place that doesn't need these services, essentially. Not to say that we can't use them, or we should, and we've acted upon it. But ultimately, in North America, it's very easy for me to set up a bank account. It's very easy for me to set up a brokerage account. But there are people that are not so fortunate. So it's really easy for North America to go like, yeah, all that stuff is a joke. What do you need that for? You have your Schwab account, you have your Robinhood, you have your Wealthsimple. But somebody should be building for those that don't. And that in itself then also becomes a very good motivator, a very good drive to see how you can contribute to something that's much more impressive than just your career. You contribute to something that's so new that I couldn't tell you what it'll look like in 10 years. We can guess, but you and I will both be flagrantly incorrect, more than likely. Just like, again, with the internet, right? Like, nobody would have told you that the entire internet would be web apps. Right? The first web app came into existence because those guys didn't want to write code for Microsoft. And it was, I believe it was an accounting software, I can't remember that, right? And so it's the same idea, right? The protocols that exist right now might not even be here. I hope they are. I think that Bitcoin is very important. I think that Ethereum is very important. I'm very excited to see that Bitcoin is having a cultural shift and starting to focus more on DeFi. But at the same time, something new and more impressive could come out next week. I don't think it will, but it could. That's the idea of it, high technology. I mean, you build it yourself. You know that things are ever evolving, frameworks are ever changing, and things. There's things that underroot things that are core and haven't changed much, TCP and things like that. But for the most part, the frameworks we used 10 years ago, all the frameworks we use now, even languages are changing. And so it's also just very exciting to be in a space where you don't know what it's going to look like, and I'm not vain enough to think that I personally have a huge input at all, really, but through working with other people, through having conversations with people like yourself, everybody can drive an industry to the place where it should be, which hopefully is the best form of finance if it can be. And we're shot.
Yeah, that's really super explanation.